Today is Wednesday, I think, February 15th. And I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I can't remember the last time I had this few positions today, which I'd like to rebuy. So we got Shopify out. Shopify is trading down very small from where it closed today. A big move today. Closed today at $53.40, down about $1. Don't think I've seen guidance yet. Gross merchandise volume beat. Shopify. We got Zillow beasting. Zillow beasting up. I'm not sure if I even saw those numbers. Not sure if they got posted. Oh, there it is. Or is it? Zillow expects modest increase in total operating expenses and cost of revenue. Yeah, I don't see the Zillow numbers either. They beasted, or they're currently beasting, I should say. Roku. What is Roku? Roku at 71. Roku's up 25%, but it was up like 14% going into the report. I have no idea why. Super strong day for Roku even going into the report, which I thought might mute things here on a good number, but nope. Roku looking solid. They're guiding Q1 revenues above expectations by a little bit, and they solidly beat on Q4 net revenue. So, solid. What's Fastly up to? Fastly not doing too much here after hours. Seems like guided in line mainly. And we got Cisco, a little bit of a different company. Cisco's up too. Man, it's going to be hard to hold this market back. Everything's going up. Every one of these companies I just typed up here after hours, I guess except for Shopify, is down a little bit. But Shopify had a big move today. Everything's going up. And I think that really helped today's price action. We had really strong moves from growth stocks today. And I think that a lot of that was because of some earnings reports, right? Roblox, Airbnb, and what's the other one? Trade Desk. Roblox, Airbnb, and Trade Desk. We had all three on our radar for today as trading vehicles. But they gapped up so big. This Roblox, I wanted long versus 40. It never really gave me the chance. I know a lot of you guys scalped these names and had pretty good success on smaller time frame intraday trades. Trade Desk up 33% here at the end of the day. Sick move. The report actually just looked okay to me on Trade Desk, which most stocks this earnings season have been moving up on okay reports. But the big thing was they announced a massive buyback. It's a large percentage of their market cap. Out of a buyback. And then Airbnb, also really solid. ADI, analog devices up 7.5%. So, but these other names that are more of these growth type stocks, I think helped to trigger kind of a squeeze and everything growth related. Just really impressive. Let's take a step back and look at our market. So SPYs today, a little bit of weakness in the S&P compared to the Nasdaq and the Russell. Our SPYs are up am I echoing? I probably am. Forgot to fix that. Hopefully I'm good now. Apologies if I was echoing. I got to remember to do that one thing every day. Interesting. I don't see myself. There it is. Anyway, we're doing the indices. So SPYs are up 0.36% today. Qs are up 0.9%. IWM is up a percentage point. So we talked about key levels this morning. So this morning we came into a game plan. We had a gap down this morning in what has been a bullish market, but we're kind of in between key levels, right? So the key levels I'm paying attention to for the SPYs are basically 405 and 415, support and resistance respectively. Qs 297 to 300 on the support side, 310 on the resistance side. IWM 188 to 188.50 on the support side, and let's call it 194 on the resistance side. The IWM was the only one to actually get above it. The SPYs and the Qs had strong days today, red to green, common gap down that got filled, plus continuation to the upside. And that's what we called for in the morning meeting. You know, we said cautiously err to the side of the longs because we're within this range, but the market is strong, and common gaps down and strong markets tend to get filled. That's exactly what happened today. Not only did we fill that gap, but we actually got some follow through here for the market to close positive. But we kind of closed right into resistance, right? This 415's resistance, we closed a little bit below it. For Qs, 310 is resistance, we closed a little bit above it. And I guess for the IWM 194, we closed a little bit above it. Two of the indices not quite there, and one of them there for potentially giving us the next leg. It's been a pretty long consolidation that we've been in, but that was after this really big move. This is exactly what we were looking for. And the longs since Friday's low pivot have generally been, perfectly on point. So we want to see if we can get continuation. And so far we're getting it. This market is incredibly strong. And the thing that has kind of been the conundrum to me, but I guess it's just a sign of the market being more satisfied with improvements in the economy, is that interest rates have been moving higher, yet tech has been leading. On the surface of things, it's not what I would expect, but you can, I guess, toss that up to broader improvements in the economy. And especially, the really impressive part to me about this rally, both today and honestly over the course of the last week plus, has been that the dollar has been moving higher, interest rates have been moving higher, and the market's been on fire, particularly led by the Qs recently. So really, really interesting to see that. We'll see if that's able to continue or not. You would think that the market starting to price in higher interest rates for longer would be bad, especially for tech. And the market has just been like, well, the economy is doing well, so let's continue to move higher. So just a really, really impressive market. On the intraday today, we can take a look at our intraday for some analysis. We had a common gap to the downside. I got the SPYs up right now, but I really want to look at one of the more interesting things today was the Qs versus the IWM. So quick look at the SPYs. We had an initial bounce back to the ADMA. So common gap to the downside, price correction to the ADMA, creating a pivot low there, which this was a really important negative Maribozu candlestick that came into the market at 950. And I was actually shorting at that time of the day, kind of versus that area when that market kind of came in and created that pivot. The IWM did the same thing, and the Qs at that point were relatively strong. But you had this negative Maribozu that came in, a little bit of a bounce back to the ADMA that created a lower high followed by a lower low. We didn't think that this lower low was actually going to give any follow-through. Why didn't we think the lower low was going to give any follow-through? Because the VIX wasn't confirming it. Apple wasn't confirming it. We were looking for bounces in NVIDIA at that time of the day. We called out the low of the day in NVIDIA. That's a great trade. AMD, same thing. We looked for a bounce in AMD off this hammer, followed by the inside. I guess it wasn't inside 5, but off this hammer for a trade there. So some really good trades at lows when we did not have any confirmation anywhere else that we were actually going to get continuation to the downside. So I think that was really good recognition on our part. And another reason why I thought that this new low was not going to lead to further lows was because the IWM flipped to being the relatively strong index. Off the open today, sorry, why is WeWork moving now? Earnings reports tomorrow. Off the open today, the IWM was weak. The Qs were really strong. And then once we had this negative Maribozu come in at 950, it flipped. And, this IWM, say for the millionth time, has just been such a consistent leader. So I was concerned earlier in the day, and part of the reason why I shorted, even though I shorted TQQQ, part of the reason why I shorted the market was because I was concerned about this IWM. It was showing relative strength from the beginning of the day. You can even see, like, if you look at the first candle of the day for the SPYs, it was nice green candle. First candle of the day for the Qs, nice green candle. IWM didn't want anything to do with it. First candle of the day is kind of a doji. Second candle of the day breaks the new lows. We get fine. The market bounces a little bit because of the extension. SPYs and IWM create pivot highs into the ADMA. This negative Maribozu comes in. It was this relative weakness in the IWM that was really kind of making me look to the short side. And then the thing that was making us throw the towel in on the short side and say, hey, this low is probably not going to lead to further continuation of lows was, again, VIXI not giving confirmation, looking for that low in NVIDIA and AMD at that time of the day, Apple not giving a new low, and then IWM flipping to relative strength. We had this negative Maribozu come in at 955 for all of our indices. Yes, an Apple strength. We discussed the importance of this type of candle. We always pay attention to this. There's a negative Maribozu. Bears are in control. And then the next candle was an inside 5. If everyone remembers, at this time of the day at 9:55, I said, this is a really important inside 5. And you could take it as a trade in either direction. You get an inside 5 and down here, you're getting continuation of the weakness from the negative Maribozu. You get an inside 5 and up, that's the beginning of a process of negating that negative Maribozu. And if, again, we like to think in if-then statements, if this negative Maribozu can get negated, then we could potentially see higher price action. And I was particularly encouraged by the newfound relative strength in the IWM. The Qs and the Russell flipped. You can see here, Qs strongest in the beginning of the day at 9:50 when this negative Maribozu came in. Got an inside 5 and up in the Qs that led to a lower high to a lower low, but the IWM had inside 5 and up that led to the break of that negative Maribozu. And again, that was one of several factors of when the SPYs and the Qs were making ticking these new lows, that we actually felt confident looking for longs. And again, we had the NVIDIA call out, we had the AMD call out, I think we had an Apple call out. Other traders were, busy focused on, pre-market. We discussed looking at longs for Roblox and Trade Desk and Airbnb. The gaps were a little big for my taste for the execution, but I know some of you guys did well on that as well, so that's awesome. SoFi was another big focus this morning. SoFi, great trade. I love when you get these opening drive trades on small risk. They don't happen every day. They don't happen all the time, but these give the best risk rewards when they happen. SoFi got upgraded. It was showing pre-market relative strength. Even before I saw the upgrade, it pivoted exactly where it needed to on the daily chart yesterday. So I called for a long in SoFi. Initially, in the morning meeting, I said you could look long versus like the pre-market low. And then right when the thing opened, 680 was a low, and when it was trading at 685, I said you could go long 685 with a stop a penny below the low of the day. So you're taking 6 cents risk in this thing, and for that type of trade, it gives a move all the way up to 7.25 or so. Closes really well. Possibly is something that you would at that point want to swing. That's a great trade. On the complete other side of the spectrum, we had Energy Week today. XLE closed down 1.75%. It's probably what helped keep the SPYs a little bit lower today compared to the Qs and maybe the IWM. And Cody was like, if you want to get a jump start on XLE shorts, if this thing can be below 88, which again, I would prefer to be short XLE if it's trading below 88. You can look at Apache, which is relatively weak, for a break of support at 42. So 42 was the kind of the level that he had mentioned there. And this is another one. You could have shorted Apache if you opened through 42 if you were watching it with 8 cents risk. Again, we don't see those trades very often. There's always a chance that you're getting shaken out of it, especially with Apache, probably less so with SoFi, but especially with Apache, with a more expensive stock and a little bit of distance to the ADMA. But those opening drive kind of trades where you can get size on small risk, and if you're right, that price discovery period can give you a move where that reward profile of the risk that you're taking is incredible. Love that trade. So you short 42, potentially with 8 cents worth of risk, and within 30 minutes, you got the stock $1.50 in your favor. That's just kind of phenomenal risk reward, and XLE was potentially breaking down at that point, and then oil was weak today, and oil had a number come out that I think initially was created a downtick. Though I see here oil did give a little bit of an afternoon bounce. So yeah, overall, at the end of the day, we had a pretty choppy beginning of the day, but we navigated it, I think, about as perfectly as you possibly could. We had a strong close. We had great call-outs, and that was pretty much it. I think the only one that failed was this IQ, and IQ still gave a big enough of a rip off the open that if you were able to get stock, you should have been able to get your risk covered on it. And pretty much everything else we were looking at worked. So certainly an impressive day to give some continuation here. Where's that Shopify? Shopify just broke 50. I want lower. What's Roku doing now? Roku hanging out around 70. It's a big move. All right, I am happy to answer any questions anybody has. With that said, I definitely want to be off the afternoon meeting by 4:50 p.m. so that we can all tune into Pat's conversation with a professional trader that's going to be on LinkedIn today. So first question I'm seeing here is from Dave. I took an apple long today at 10:15. Oh, these tails. Yeah, I remember communicating these tails, and then it was struggling to go a little bit, but then finally was able to break up. 10:15 versus the previous 2-minute candle wick lows. At 10:20, I was able to make a sale and cover risk, but in order to make the trade a break-even back at the stop loss I had to cover 3/4 of the position instead of half. I don't yet have a firm. I don't like doing that. I'll tell you why in a second. Let me read the rest of your question. I don't yet have a firm rule in place when it comes to position reduction in order to cover risk. So what are your thoughts on this part of that trade and in general considering mixed signals today? The rest of the trade ended at 10:40 for a small scalp in a choppy morning. And I remember you communicating you got out, and I remember thinking that your trail was way too tight, which I can talk about also. So I don't like doing that. So one of the things, just for background information, that I am a big proponent of is selling 50% of your position at 1-to-1 on your risk to put yourself in a win-win situation, right? The goal is to consistently put ourselves in these win-win situations. If you can be in win-win situations and consistently put yourself into that over time, you could literally be wrong 9 out of 10 times in your trades and potentially still make money. If a lot of that 9 out of 10 enabled you to get at least your risk covered, and then you have that one that works, really, really well for you. So I'm a big proponent of, doing everything you can as a trader to put yourself in a win-win situation. The problem with, and there's a lot of ways that you can play with those numbers, right? You could sell 50% at 1-to-1. That's usually what I like to do. You could sell 1/4 of your position at 2-to-1. You could sell 3/4 of your position at 0.5-to-1. All that's going to put yourself in a win-win situation. I really like to do the 50% at 1-to-1. I'll tell you why. So I don't like to sell 3/4 of my position at less than my risk to put myself in a win-win position, because I don't have enough stock left to make the trade's initial risk worth it. It's going to be very hard to have like a really good risk-reward ratio overall at the end of the trade if all you've got is 1/4 of your position after you sold 3/4 of your position at 0.5x your initial risk to kind of get your risk covered. So that's the biggest reason why I don't like it. I don't think it leaves you with enough stock to game plan to be able to make real money if the trade idea works. And therefore, I don't think that the reward profile of your trade with that type of game plan is worth the risk of putting the trade on. I also, just to talk about the other side, even though you didn't do this today, I also don't really like doing the sell 1/4 of your position at 2x to also cover your risk. The benefit there obviously is that you will have a lot more of your position for the bigger move, and maybe for like an A+ trade that actually might be a good game plan. But the A+ trade is obviously going to be a little bit more rare. So for the most part, the problem with selling 1/4 of your position at 2x is that there's going to be a lot of trades where you end up getting stopped out and losing your full risk, where you could have been in the win-win situation and lost nothing if you weren't as greedy on that first kick. But I'm going to put an asterisk on that, because I'm going to say that, if it's a true A+ trade with an overwhelming risk reward and probability of success, then it might make more sense actually to have a greedier game plan, sell only a quarter of your position at 2x your reward to be in that win-win, to have a much larger core in case the trade really works. So I guess to summarize, selling 3/4 of your position at less than 1-to-1, I really don't like. I don't think it sets you up for good reward potential. Selling 50% at 1-to-1 is my go-to. It's my general preference. And selling a quarter of your position at 2x, I only like in rare circumstances where you feel like you've got an overwhelmingly great trade and you really want to maximize that profit. So I hope that helps, Dave. From Kyle, this is a follow-up question to a trade I had about breaking news that hits during the day that I asked on Monday. I've been creating rules for breaking news trades and just want to make sure these rules are correct. After assessing how late you are, what the spreads are like, and can you get filled on the bid, do you then quickly look at the daily levels, daily extension, intraday levels? Always. I'm seeing that in real time at the same time as I'm looking at the small time frame. The daily chart and daily degrees of extension always matters. So if you've got positive news that's coming out that's ripping a stock higher, and this was my problem, I think, with Airbnb, just to kind of try to use that as a little bit of a different example. I know that this was, an earnings move. It was not an intraday move. It's a little bit different. My biggest problem with buying Airbnb today wasn't just that it capped up so massively and was so extended, but it was, on top of that, it was a day 3. So I got, earnings day, it's a day 3 to the upside, and it's up massive. So I'm certainly going to be paying attention to that daily chart level of extension and saying to myself, I love the news here, love the Airbnb report or whatever it is, but this level of extension is very difficult to buy. So absolutely paying attention to those daily levels always. So I hope that helps. From Denver Steve, earnings question. Do you have any rules when trading after market on earnings to stop trading when volume tails off? Yeah, this is a great question. To stop trading when volume tails off to a certain extent. For example, signaling the earnings trade is over. Actually don't have any rules on that. It's very hard to gauge. So I know exactly what you're talking about. I mean, it even happened in these last earnings reports that I was trading after hours with Apple, Amazon, and Google, where they're moving. I'm trading them, and all of a sudden they're not moving. And then maybe they start moving again when the conference call comes back, or maybe they don't. So it's kind of a tricky situation. I don't have any rules for it. I would kind of liken it to the intraday as much as I can, of kind of buy the ticket, take the ride, right? Because we see the same thing happen a lot intraday, right? You take a great opening drive trade in the beginning of the day, and now it's noon, and the market's flatlined, and the stock is flatlined. What do? Do you just take the trade over? Take the trade off because the trade is over? And the answer to that always is no, right? It's kind of buy the ticket, take the ride. The only time that you ever, in that circumstance, liquidate the position is because you're approaching the end of the day and you don't have a big enough of a profit cushion to keep it overnight, right? In other words, just to kind of repeat it, so you get this great move in the beginning of the day. Now the market really begins to go sideways. Nothing's going on, but you should stick with that position all day. I think. You don't need to watch it tick for tick. Stick with it all day. And now, yeah, sure, you have this game plan in place for where your stop loss is, where you're looking to take profit, your game plan for reward maximization, but now it's 3:55 p.m. Eastern, and you got 5 minutes till the market's going to close, and you're looking at this position, and you're like, well, it didn't stop me out, but it's not, I'm not up a lot in it, so that just becomes a position that you then close out, right? Because it's not worth the overnight risk, and you just, take the money that the trade gave you. I think it's kind of the same thing if you're trading earnings after hours. You took your trade, you had your game plan for it, stock is moving a lot, stock dies out. And I know for myself, I sat around till 8 p.m. Eastern watching Apple, Amazon, Google, because I was in positions still from them. And then, as you're approaching the end of the market after hours close, or really if you just throw in the towel and really don't think it's going to move and you need to go eat some dinner or have a personal life, then you say to yourself, all right, where am I at with this position? Am I keeping this overnight because I got a big enough of a profit cushion? Where, if it didn't stop me out, but it's not at my targets and I don't have a big enough of a profit cushion, then you would just hit out in the same way that you would hit out at the end of the day. So that's, I guess that's what I do, and I guess in theory those are rules, but I've never been asked that question before, so I've never quantified those rules, so I appreciate the question. From Sebastian on YouTube, what do you think of leaving parts of our trades, 20% or so, for binary events like tomorrow to maximize reward? I got into AMD around 83.50 and kept 25% for tomorrow after covering my risk and taking profits. I know in some ways it's kind of a gamble, but I think the risk reward makes sense as I'm trading options. What do you think? Whether you're trading options or trading equity, I'm all for it. That's what I like to do. I don't like to gamble. I'm the guy at the casino. If I'm there with buddies for any event or whatever it is where we find myself in the casino, I just kind of walk around and look. I don't gamble. I don't like playing games where I know the probability is stacked against me. So in yeah, and in the situation that you're describing though, that's exactly what I do. And I don't, if I gamble in trading, I'm gambling with the house's money, to use that expression. I'm in a win-win situation. So for yourself, right, AMD, you're in from 83.50, stock closed at 85 and change. So you've got $1.70 profit cushion in an $85 stock. There is going to be an event tomorrow. I think we have PPI in the morning. The stock's going to go up or down. But what's your worst case scenario here? Your worst case scenario is that the stock goes down on the PPI economic number, and you get stopped out of the position and you make money in it. Your best case scenario is that the whole market goes up, and next thing you know, AMD's breaking out of this daily bull flag, and you've still got the stock at $95. So that's exactly when I do it. That's when I will always hold into those types of moves, whether it's an earnings report. Though if it's an earnings report, I want to make sure I have a really big profit cushion. If I've got a really big profit cushion, I'll hold into that earnings report. If it's an economic number, if I have the appropriate profit cushion, I hold into that economic number, and I just kind of continue to follow my game plan and let the numbers hit and the market move as it pleases. But you're going to make money in no matter what, so I would 100% keep that position. Great job. Okay, cool. Looks like I got through the questions. I do have a couple extra minutes, but I also don't mind, wrapping things up so I can bang out a few emails before Pat's thing. So conversations with a pro trader. Today's guest is our wonderful Patrick. Curious to see what he's going to say, and I guess that's it. So great day today, awesome stuff. Have a fantastic night, and I'll see you all tomorrow morning.